How to make money with debt in 2023. In the world of personal finance and investment, the idea of making money with debt might seem counterintuitive. After all, debt is often associated with financial stress and burdens. However, in the financial landscape of 2023, there are strategic ways to leverage debt to your advantage and potentially increase your wealth. 1. Understanding good debt versus bad debt. To embark on your journey of making money with debt, it is vital to grasp the fundamental distinction between good and bad debt. Good debt can serve as a financial tool for wealth building, whereas bad debt can become a financial burden. Imagine good debt as an investment in your future. It includes financial commitments that can potentially increase in value or generate income over time. For instance, taking out a mortgage to buy a home or securing student loans for education can be considered good debt. These investments often appreciate or produce income that can outweigh the interest costs over time. On the flip side, bad debt typically entails high-interest consumer debts that do not contribute to your financial well-being. Credit card balances, personal loans, or payday loans are examples of bad debt. They often come with exorbitant interest rates, which can lead to financial stress and make it challenging to build wealth. Your primary goal should be to minimize bad debt and prioritize good debt, as it can serve as a stepping stone towards achieving financial prosperity. 2. Investing in real estate. Real estate has long been considered one of the most effective ways to make money with debt. When you buy an investment property, you often take out a mortgage. The property can then generate rental income that not only covers the mortgage payments but also provides additional cash flow. Over time, real estate properties have historically appreciated in value, which can lead to substantial long-term gains. Furthermore, mortgage interest rates have remained relatively low in recent years, making it an opportune time to explore real estate investments. Additionally, favorable tax benefits, like deductions for mortgage interest and property expenses, can further enhance your financial gains. Real estate can be a powerful wealth-building tool, allowing you to leverage mortgage debt to generate rental income and potential appreciation in property value. However, it's essential to conduct thorough research, assess the local real estate market, and manage your investment property effectively to mitigate risks. 3. Starting or expanding a business. Entrepreneurship presents another avenue for making money with debt. Many successful businesses begin with loans or lines of credit to cover initial startup expenses or expansion costs. When you have a well-structured business plan with a clear path to profitability, taking on debt can be a strategic move. For example, securing a business loan can provide the necessary capital to launch a new venture or expand an existing one. This investment can lead to increased revenue and profit generation, ultimately helping you repay the debt while building wealth. Additionally, various financing options, such as small business administration, SBA, loans, or venture capital, can offer favorable terms and support your business growth. Carefully consider taking on business debt when you have a well-thought-out plan and a solid strategy for achieving profitability. 4. Investing in stocks and bonds. Investing in financial markets, such as stocks and bonds, can be an exciting but risky way to make money with debt. Margin accounts are financial tools that allow investors to borrow money from their brokerage to invest in assets like stocks and bonds. This leverage can amplify potential returns when the market performs well. If your investments appreciate in value, the returns may exceed the cost of the borrowed funds, resulting in increased wealth. Additionally, low-interest loans, such as home equity loans, can provide a source of funds for investment. These loans often have more favorable interest rates than traditional margin accounts or personal loans. However, it's essential to approach this strategy with caution. The financial markets can be volatile, and there's always the risk of losing more than your initial investment when using leverage. 5. Utilizing peer-to-peer lending. Peer-to-peer (P2P) lending platforms have emerged as an innovative way to make money with debt. These platforms connect borrowers with individual lenders, allowing you to act as a lender and potentially earn interest on your loans. You create an account on a P2P lending platform. You browse through loan listings and select borrowers to lend money to. You decide how much money to lend to each borrower and at what interest rate. Borrowers repay their loans over time, which includes both the principal amount and interest. You receive monthly payments, which can provide a consistent source of income. P2P lending can offer attractive returns compared to traditional savings accounts or bonds, especially when diversifying your investments across multiple borrowers. However, it's essential to be selective when choosing borrowers and to understand the potential risks, including the possibility of borrowers defaulting on their loans. P2P lending can be an effective way to earn interest income by lending money to individuals or small businesses. Proper due diligence and diversification can help mitigate risks associated with this strategy. 6. Leveraging credit card rewards and cashback. Credit cards are often seen as sources of bad debt due to their high interest rates. However, if used wisely, credit cards can offer unique opportunities to make money. Many credit cards come with rewards programs that provide cashback points or miles for every dollar spent. To make the most of these rewards, you can strategically use your credit card for everyday expenses and pay off the balance in full each month to avoid interest charges. Over time, the accumulated rewards can translate into significant savings or even additional income when redeemed for cashback or travel expenses. Additionally, some credit cards offer sign-up bonuses, where you can earn a substantial amount of cash or points by meeting specific spending requirements within a specified time frame. 7. Debt consolidation and refinancing. Debt consolidation and refinancing are financial strategies that can help you make money indirectly by improving your overall financial situation. These approaches involve combining multiple debts into a single manageable loan with a lower interest rate. You consolidate various high-interest debts, such as credit card balances or personal loans, into a single loan with a lower interest rate. This can reduce your monthly payments and free up cash flow, which you can then allocate toward investments or savings. If you have existing loans with high interest rates, such as a mortgage or student loans, refinancing can allow you to secure a lower interest rate. This can result in lower monthly payments and potential savings over the life of the loan. By reducing your interest costs and lowering your monthly financial obligations, debt consolidation and refinancing can indirectly free up money that you can redirect toward wealth-building opportunities. 8. Education and skills development. While not a traditional form of debt, investing in education and skills development through student loans or training programs can significantly increase your earning potential and long-term wealth. When you acquire new skills or earn a degree, you enhance your qualifications and open doors to higher-paying job opportunities or entrepreneurial ventures. Over your career, the increased earning capacity can outweigh the cost of student loans, ultimately leading to greater wealth accumulation. Additionally, education loans often come with favorable repayment terms and low interest rates, making them a relatively cost-effective way to invest in your future earning potential. Investing in education and skills development can be a strategic approach to increasing your income and, in turn, making money over the long term. So guys, let me know your thoughts in the comments section below. For more interesting content, give this video a thumbs up and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.